Welcome to Mortgage Masterminds. I'm Richard Grieser, VP of Marketing at Sales Boomerang, and my guest is Ken McKee, Branch Manager at Canopy Mortgage. Welcome, Ken. Great to have you on.
Thanks, Richard.
Quick plug, in case you don't know who we are at Sales Boomerang or you've been living under a rock since 2017, Sales Boomerang notifies lenders the moment one of their borrowers needs a loan. One and two of the nation's biggest lending companies in the U.S. use Sales Boomerang to make sure they reach out to their borrowers the moment they need a loan. So do you know when your borrower needs a loan before they do? That's what we do. So reach out to us at Sales Boomerang. Go schedule a demo at salesboomerang.com if you're interested in learning more. Ken, let's get started. I love stories. And I love people who tell stories, and you are a great storyteller. I actually think it's a really big sign of success, symptom of success. That's where success comes from, I think, for a lot of folks. They tell good stories. So I hope you'll kick us off by telling the story of how you got into lending from software sales, because I think it's a great one and kind of kicks off our discussion.
Nice. Yeah. So I worked in the Bay Area and out of San Jose, California. I worked for a company that sold voice and data services to medium to large businesses, and did that for like 4 years. And while I worked there, I hired a guy that didn't do really well in that sales, but he got his MBA while he worked for me, and then he later went on to go work for Countrywide Full Spectrum Lending. So that kind of dates me a little bit. And so, I started in voice and data services in 99, and I left in 2004. And the price of a T1 of internet, which is, kind of weird that we were talking about T, was so small, right? No one would want 1.54 megs, but it was $1,680 something to get, in 99. And by the time I quit the business in 2004, it was $467 or something like that. And so I basically had my income tied to a product that got cheaper as technology improved, right?
Wow.
And so I thought, like, oh my God, I have to sell 4 times as much. So we were going back and forth, and I stayed in touch with Brian, and he was sending me pay stubs, I was sending him pay stubs, and we'd send W-2s back and forth like sales guys do sometimes. And turns out that his were going up and mine were going down. And I thought, if I'm going to do something in sales, I'm going to link my income to something that goes up. And so I said, you need to get me an interview. He got me an interview at a local office in Roseville, California. And that was it. So I started.
That's cool. I love it. Yeah. I mean, if you got to sell more to make the same amount of money, that's always a bad situation, right? I'll bet you it was awesome in the beginning, though. Yeah.
And of course, after I stayed there a year, and then I went on the broker side. And of course, that's when the market shifted. It went down for the next 5 years. So I pretty much broke the internet, and then I broke the housing market.
Wow. Well, you were around for 2 really pivotal moments in the economy. So let me ask you a question. Your title, you got mortgage planner. Why do you like that title over mortgage advisor or loan officer?
I don't think loan officer really describes what we do. I think, our mortgage is the largest debt. Like the home purchase is usually the biggest purchase a couple or an individual will make in their life, right?
Yep.
And we have somebody, to manage our finances for us, for money that we put away in our 401k. But a lot of times people's equity in their home or their debt on their home is larger than the money they have in their 401k, yet no one has anyone to help them plan and find out, because if they're doing the right thing with their mortgage, right? And so a loan officer, in my mind, often can be seen as somebody that all they are is an order taker. And basically they're there, someone walks in because they don't know anything else to ask, and they ask, like, what are your rate and what are your fees?
Yep.
And no one's asking, how long are you going to live in the house? So this is funny. So last night I talked to a guy who was referred to me by a realtor, and the realtor said, can you call him right now? He wants to go make an offer on a house. So I start talking to this guy, and I'm in the car, waiting for my son to get out of lacrosse practice. And I'm asking like questions like, why are you moving? What are you going to, why do you want to buy here? Where are you looking to buy? And the bottom line was, this guy was planning on moving because the vent from his dryer wasn't venting outside of the house. And he thought it was a really bad thing. And I asked him, I said, do you like the house? He goes, yeah, I like it, but it's not safe. And I said, well, do you know how much it's going to cost to fix it? He goes, I had 2 guys come out, they couldn't figure it out. And I said, well, do you know how much it's going to cost to sell your house? And he says, no. And I said, well, how much are you selling it for? He said, about $600,000. And I said, okay, well, it's going to cost you about $36,000 to sell it. And you're probably going to have about $3,000 to $4,000 of hard one-time closing costs on the purchase of another house, assuming you buy in the same price range.
Yep.
And so you're going to spend $40,000. Huh? I mean, I'm kind of guessing you might be able to find someone to fix that vent for less if you like the house. And he goes, yeah, I do. So now we're talking about refinancing his loan and lowering the rate because he's a VA, we'll do an Earl, and lowering that rate keeping paying the same payment that he was making before, and he'll pay off the loan faster than he would have before. So he went from going to make a bad decision with his money to now making a very smart decision with his money. Yep. And it's because I ask questions and I help him around that plan, right?
Dude,
I think that a lot of people just want a clear plan, right?
Yeah, I love that story. That's awesome. Hopefully a realtor didn't tee up that deal for you. Be like,
he did, but he's okay. I haven't talked to him yet, but he's a really good guy. He knows.
Well, I mean, honestly, I feel like if you're a good realtor, you want your mortgage planner, your mortgage advisor to be doing the best thing that they can for the borrower, right? Like in this situation you just described, it's clearly not a good idea to sell that house, right? $36,000 in costs to sell that house, plus the fees of the new house, you know?
Yeah. I mean, Richard, in reality, he would have gone out and looked at a bunch of houses. And then when he saw an estimated seller's net sheet for what the costs were going to be, he would have gotten cold feet and not moved.
Yeah,
and that realtor
you're
would
just
have
saving them a lot of time. You're just saving them a lot of time.
Right, exactly.
Well, one of the things I like to do in this podcast, and we kind of do it with all folks who are actually originators, people who actually originate, is kind of break down your business between refi and purchase. And maybe you could talk about last year. Maybe you could do pre-COVID last year and the year before, and kind of now and what's going on. What's going on?
Yeah. So before COVID, I was almost all purchase. I mean, I was in the 80+% range. I mean, in 2019, I didn't originate a refinance until like June or July. It was just all purchase. And then our volume didn't really drop off on purchase. We just added to refis. So in 2020, 2021 were very similar. I think we were like 65% purchase, 35 or so percent refis. And this year, obviously with the change in the shift in the markets, we're more like we look at leads every morning. I think right now we have 92% this month, 92% purchase leads. And in closings this month, I'll have, I believe, like right around like 80+%, 85% purchase.
That is awesome. Yeah. So the good news is, I mean, for you, for sure, is that you're well-versed, well-practiced winning in the purchase market. This isn't new to you, and that's the environment we're in right now, right?
Yeah,
the
sure.
refi business has kind of dried up last year. I think a lot of folks, especially consumer direct shops, are facing a lot of trouble right now. Yes.
Yeah, we just picked up a new team member yesterday because the branch she was working at were like 80% refis. And she's great, and she's really smart, and they couldn't keep her on because they didn't need it. Like the loan officer and one person could handle the volume, you know?
That's awesome. So what does your branch look like volume wise?
We were like last year we did about 95 million. The year before we did about, that's my personal team. We did about 95 million. In 2021, we did right at like 104 million. This year, personally, we're probably going to do, I mean, to be really frank, I would be happy to grow with like 75 to 80 million because it's almost all, assuming that we're all purchased, right? Of course, there's a lot of debt consolidation, refis and things to do, student loan payoffs, all that kind of stuff. So that's an opportunity, but just not even trying, I'm just trying to ignore that right now and just go after purchase because the other stuff will come, right? That's easy marketing to do with your database and staying in touch with people. But it's just me and I have one other loan officer that produces. He did about 25 million last year, and he's almost all purchase. He's VA guy, really consistent. And then I have a team captain for me who's been with me for 11 years. Are you asking me like you want to know like structure or just volume wise?
I mean, you're talking to your people. That's how I look at it. You know what I mean? So like, what do you think your people want to hear?
I don't know. So I have two people in the front that really their goal is to manage the process for the client from lead to contract. And then I have two people on the backside that handle contract to close, and they own it all the way through. And I have one person for the branch that does marketing, social, handwritten cards, database, things like that, you know. And it manages P&L and not P&L, but my expenses and all that kind of stuff.
I love it. So I have so many other questions that I kind of thinking about as we're going, but I'm going to save those towards the end. I'm going to ask you the main topic for today, like kind of like after we talked, I loved your approach to this. So, winning with realtors in today's market. You told me that the majority of your business comes from realtors, right? It's how you built your business. And I love your answer to this question because it's how I would be if I was originating right now. So how are you successful at this? How are you winning with realtors?
So my main thought process all the time is that customer service is marketing. Like we don't need to do anything else. So what I love to do, it's funny, I've got it right here. I just want to be a giant easy button for all of my clients and all of our realtors. So if you're doing 5 or 6 or 7 or 10 or 15 or 20 purchases a month, you run into enough realtors that if you just take excellent care of the realtors on both sides of the transaction all the way through, that's all the marketing that you need. So literally, we don't go out and chase other realtors. I don't spam them with anything. You know, I really, all I do is take excellent care of the realtors that we already have, and we take excellent care of the realtors on the other side. Almost every single large agent that we work with right now, I met on the other side of a transaction. Like they were the list agent first, you know?
That is awesome. And by the way, our producers are listening, and I just want everybody to know customer services marketing is definitely the title of this podcast. That is such an awesome branding. I love it.
It's funny. I read a book a while back. There's a guy named Cal Newport, and he wrote a book, and I can't remember the name of it, but he talked about something like called career equity. And basically what it was is he said that if you're just awesome at what you do, opportunities will come your way that don't go to other people. So when I look at it, you know, like what makes us attractive to a realtor, right? So making their life super easy, getting their offers accepted, having hard conversations with the clients about like, what do you do if the appraisal comes in low, right? How do we bridge that? Should you talk about that in your offer, and backing them up? Because most of our realtor partners don't like to have those conversations if we look at it. You know, they really don't. Sure. The majority of people are what I call non-confrontational, right? And I love confrontation, not for the case of or the sake of being a jerk, but for the sake of actually like coming to a better outcome because I asked hard questions, right?
Yep.
And so by teaming up with a realtor and say, look, I'm going to have those difficult conversations with the client. I'm going to make them give me all their documents. I'm going to pre-underwrite them. I'm going to make sure that when they send out an offer or we make an offer, that I'm sending them a 24-hour needs list that I require that they give back to me before their offer is accepted, so that on day one, we can disclose the loan, lock it, order the appraisal, submit the loan to underwriting, and reach out to escrow and get all their fees. And then I'm going to go tell the listing agent that that's our process. And that's how we close in 15 days. And so by doing that, I'm going to help you get more offers accepted, right? I'm going to shorten the time frame. You can spend all that extra time going out and finding more clients, or you can spend it with your family, right? Whatever you want to do. But we're going to make your life easier, you know?
Yeah, I mean, so anybody in the audience knows Ken is in the Sacramento area. And so when he's talking about the appraisal gap, that's a real thing in California, right? I mean, how many of the homes that you're getting, you're doing loans for, how many of them have that appraisal gap as an issue right now?
Yeah, it's not nearly as bad as it was last year. Last summer was, and up through August was absolutely ridiculous. You know, it was probably half.
Now, what are we talking about? $50,000, $100,000? What is the
gap?
Like what do they have to come up with?
Yeah, I mean, it only worked out to be maybe like on the average, maybe 5 or 10,000, maybe 15,000. I have had one as big as 150,000 that came in low. It was like a $900,000 list, and they offered some stupid amount over $1 million, and of course it came in low.
So in that example, did you see that coming?
Oh yeah, that was ridiculous. And we talked about it ahead of time.
So how'd that conversation go? I mean,
so the client was going to put down like 30%. So, and I said, look, if it comes in low, we work numbers through Mortgage Coach because you can show like, what if it comes in at ask or at offer? What if it comes in, 30,000 low, 100,000 low, whatever. I mean, that's really an extreme case. Normally I would say 20, 30, 40,000 low. And by doing that, all you do is, if you have to, they can even plug a little mortgage insurance into it. And mortgage insurance up to like 85% is only like 0.1 of a point if they have good credit. So like we're oftentimes talking about like $35 to $50 a month, and that's going to go away when they pay it down to 78%. So like that little $40 a month covers like a $30,000 problem, right? Yep.
Yep.
And we, so we walk the client through that. They feel comfortable. And then when it comes in less than that, like less of a difference or no difference at all, no shortfall, then they're happy, right?
Yeah, for sure. Which is really what it's all about. That's awesome.
Yeah. And then we show the listing agent that we have a plan, right? It's not just we're going to throw something out there and hope, right?
Yep, for sure. And I think that's what the listing agent wants, right? Someone who really knows what they're doing, is taking a plan, doing best by the borrower, and guiding them through the journey.
It's all about instilling confidence in the listing agent so they can translate that confidence to the seller and they pick our offer over 10 or 15 other ones, right?
Yeah, because that's what's happening right now, right?
Yeah, for sure.
So talk to me about how you do your outreach to new realtors. It sounds like you've got, you have a good plan. How do you reach new realtors?
So again, my number one thing is the agents that we work with. So we obviously have, every coaching company calls it something different, but we have like our top 40. It may not be 40, it may be 30, maybe 50, whatever, depending on the size of someone's business. But we have them down. We keep records of how many referrals do we get from them, how many closings do we have with them. Whenever we get into escrow with a new agent, even when we're making an offer, we look up the agent, we find out how many buy sides they've had in the last year, and we tag them, we mark them, we put them into our database. So when I'm calling that, my number one thing I do is I call the listing agent and I let them know our process. I let them know, obviously, that the buyer's great, that I'm being proactive. And it's like I tell them, I say, I have all these gals that work with me, and I tell them, man, if the guy doesn't buy you flowers before you get married, he's not going to start afterwards. Yeah. So, I'm calling you proactively. Because sometimes you get a realtor that says, we have 12 offers, just submit your highest and best. I'm like, well, I'm guessing you've already talked to the other 11 loan officers, right? And they'll be like, well, no, I was like, well, look, that's when I tell them that. And you don't have to worry about someone ghosting you. Like these other guys that are calling you, the best you can hope for is that something goes it's going great and it's crickets. The worst is like something's going wrong and it's crickets, right? With me, I'm always going to communicate with you, right? So that goes a long way. But number one, we just take care of all the agents that we do business with. We call them ahead of time. We do our pitch. We tell them, we give them confidence and I tell them on day one, we're going to do all these things. And then my favorite call in the world is to call them after the end of day one as I'm going home. My loan partner puts it in my calendar and I have maybe how many offers we got accepted that day. I call those agents and I say, hey, Joe, it's Ken, 123 Main Street. Just want to give you a day one update. Today we disclosed, we locked, client signed their disclosures, we ordered the appraisal. We marked you as a contact person, and we submitted the loan to underwriting. Is there anything else I can be doing to take better care of you? No, you're amazing, right? So we start off that tone right there. And so what's cool too is when we make an offer and we don't get it accepted, we call that agent too. If they do 8 or more buy sides, we call them because there's a huge the barrier to entry with a realtor is trust, right? They want to know your competency and they want to know your character. And so they saw that the fact that I called them, number one, proactively is character. And the fact that I told them what my process is, even if they didn't see me do it, I told them what our process is every single time. And that's competency. So even if I didn't get the offer because they got a 50% down or they got a cash offer or something like that, I still did something that very few loan officers do. And so that trust with me went up just a little bit. And so then what I do is we take all those agents and we have them I put them in BombBomb and we do a weekly, and it's not perfect. I mean, if anyone's going to tell you they do it every week, they're lying, but I do it almost every week, at least 2 times a month. We send a little story out to all the realtors we've ever worked with. And it's usually about how fast we closed a loan, how we beat out a bunch of offers, how we saved a deal, or maybe a program change or something they didn't know about VA or something like that. Whatever I want more of is the story that I tell. You know what I mean?
Yep, for sure.
And that's my only marketing.
I love it.
My database does some pretty cool stuff too, like my CRM, and it follows up with them. But that's a whole other story.
Ken, I think anybody listening, myself included, is that, I listen to you and I think if I bought a home, I want someone like Ken doing my loan, right? It sounds like you're going to be. I will do your loan for you, Richard. Yeah, for sure, man. For sure. We were talking about what homes are like and what schools are like in the Sacramento area too. Just got to convince my wife.
That's right. Good luck.
So let me ask you a question. When you're reaching out to realtors? Well, just tell me in general, social media, is it really big? You talked about bomb for just a second, but that's more kind of like your outreach. But let's talk about like things like Instagram and Facebook. Are you big on those?
I personally am not, right?
Yeah.
So, but I have a gal who's my marketing person, and she puts, I'll tell you what I am big on after this, but she manages it all. I don't touch it. So when an agent responds and sends us something, she responds and she's me, basically. And then she tells me, hey, Joe loved our deal. You might want to give him a call. And so I'll call. I'm a phone guy. Yeah. I really believe that the number one way to build wealth in our business is right there on your phone. Oh, and yeah. Because people want that interaction. And I just don't get that interaction over social media. So I'm not fired up about it. Right.
How about the younger generation, like the millennials and stuff like that? Do you find that they're resistant to getting on the phone with you when you call them, or do you think they're fine? No. They want to talk to you too?
They want a house, man. Like I love to be an educator. It's like one of my, like a superpower of mine. I love to coach and to show people like value. That's one of the ways I feel I bring value. And after I spend an hour with every client, I know some people would freak out about that. I know people that don't spend more than 15 minutes. But if I go against someone that does 15,
it all depends on how painful. It all depends on how painful it is, right? I mean, if you're teaching me something and it's engaging and I'm loving talking to you, let's talk for an hour.
No, but I'm saying a loan officer might not want to spend an hour with a client. Like I do a loan consultation, and we go over everything. But when we're done with that, they have all their questions answered. They don't have any question. They know the process. They know what to expect, and they're comfortable. And they tell their realtor how awesome it was. So that may not be everyone's jam. It's my jam. I love it. And, if I do my number of however many I want to do a week, like I'm good, So, but I know social media, I'm not personally a big fan. I don't spend, the only thing I do, I look at breezy golf on Instagram. It's pretty much my only one.
That's cool.
And like maybe drunk people doing things or something like that. But that's pretty much it. And same thing with Facebook, like I think I went on to Instagram or Facebook yesterday, and I accepted like 20 something friend requests, and then I got off. That was it. That's all I did.
Look, I mean, you've got someone on your team who's making sure that side's covered. So that's totally fine. It doesn't have to be your jam, Well, let me ask you a question. So, with the realtors that you do work with, would you say that they're loyal to you? I think it's super important in this kind of highly hyper competitive market, right? Yeah. Getting loyalty from realtors. Do you feel that way? I ask this for anybody I talk to about realtors, working with realtors.
So I've chosen, years ago, I made a choice to work with people who align with what my goals are. Like our belief systems align. So I may start off working with a realtor that is not loyal, but I can show them that if they stop giving out 3 names, or they don't tell their client just to go check me out because I might have better rate and fees. Like if that's their sales pitch for me, I'm probably not going to bring them much value. Because I'm not the cheapest person. No one is. I'm not the most expensive person. I feel I'm really competitive. But for the value that I bring in other ways, I'm really competitive. Yeah. And so I just asked, like, how'd that transaction go when you went with Joe Schmo or whatever? Or how was it? And I let them describe the pain of working with another realtor, or how many homes they had to go show that person because they were only putting 5% down and no one talked about getting a gift from their parents or something like that, right? And so over time, I weed those people out. It's not that I don't return phone calls. I don't proactively go after people who don't really buy into my value. And that's cool because there's tons of loan officers that will do exactly what they want, right? It's just, not that I don't need them. I don't want to come across that way, but it's just, it doesn't make me happy. And if it doesn't make you happy, you're not going to do it.
For sure. Yeah, for sure. And I think you'd probably see it in the numbers, right? Like if you have different realtors, right, and the conversion rates for some of your realtors are super high, they're obviously not shopping you with amongst 3 different loan officers, right? I mean, I think that's kind of what it comes down to. Mortgage planners.
Yeah. No, you're whatever. It didn't matter what you call it. But so think about this. Rather than getting mad about it, because there's tons of loan officers that hate realtors, right? Which is the silliest thing on the planet. I look at them as like little shoot my brain, like annuities, And so like they're just continue to roll in business into you. And if someone's a realtor may be giving you out 2 names or 3 names because of lenders because they're taught to do that.
Yeah, for sure. They think they're doing right by the borrower.
It's a chance to educate them, And there's tons of ways to do it. You can use the the doctor thing, like you go to a doctor and you find out you have cancer and he gives you 3 referrals versus the doctor that finds out you have cancer, but he's always scheduled you in with the person next door to him who's his best friend and the best, oncologist for whatever you have on the planet, and he's going to walk you over there. Like, what's the feeling, right, between those two, right?
Yeah,
and so,
totally.
And a lot of our realtors they don't know, they don't want to be responsible for my mess ups or the loan officer's mess ups, and so they want to distance themselves from the loan officer.
Yeah.
And so I tell them, look, try me on your next 3. Like, you saw me work on this transaction where you were the listing agent. Try me on your next 3. Anyone could smoke and mirrors you on 1, right? And you're going to give me a bad one anyway up front. So let's just try me on your next 3. And if you're not in love with what I do, then I'll never call you again. We don't have to worry about it, right?
Yep.
And so then they can really see how you work. But I think it's a really good opportunity to educate those realtors. And if after educating them on how you can help them make more money by working with you, get more offers accepted, work less time, have better client uplift with their clients because they work with you. If they can't figure that out, then we just don't need to work with them.
Hey, customer service is the best marketing. I love it. It comes back with every one of these questions. Well, let me just ask one more, and I think it's relevant to the current market. Like, how are you advising your realtors to address like buyer fatigue? I know you're seeing it amongst folks. There's 17 offers being put into some of these average houses out there, and that's a lot, right? And it's just super competitive. There's just not enough inventory out there. So how are you talking to your realtors to talk to the potential home buyers?
Yeah, so the number one way in my mind to eliminate buyer fatigue or to deal with it is to not have it to begin with. So you can't change it if someone's been looking for a long time, right? And they've made bad choices. But what you can do, so if someone's been making offers and the realtor hasn't been really honest with them about what it's going to take to win, like, then we have a conversation. We get together over a beer or we get on Zoom and we really get like brass tacks. So one of my best realtors has had a showing assistant. It was a showing assistant's son, and the showing assistant wasn't being real with what they need to do. They looked for homes for 1.5 years. And I met with them because I said, you're not getting offers accepted. It's been 1.5 years. This has got to be frustrating. Can we have a conversation about what you really want? Because maybe I think somewhere in this we're off. Neither of the realtors wanted to be on the call because they felt uncomfortable. So I got on with the husband and wife. We talked about it. After like 15 minutes, we boiled it down to he was afraid the market was going to collapse, and she couldn't see buying a house for $400,000 or $500,000 and not absolutely loving it, right? Yeah. So she couldn't imagine buying a house that she didn't love. Yeah. And so I said, okay, we just went back, and you've been looking for this long. What were those before? They were looking at $400,000 and they couldn't imagine buying a $400,000 house and not loving it. And now it's $500,000. So if you wait another year, what's it going to be? $600,000. Okay. Mm-hmm. Can we just get in the market and start building equity and then you buy your dream home later? Yeah. Cool. And that was a Wednesday. They wrote an offer on Friday and they were in escrow on Saturday. And we closed in 15 days and we're done, right?
All that took was you being just confident enough to have an uncomfortable conversation that
having a conversation because you have the knowledge, right? Yep. And so so with new agents, I just tell them up front, like, hey, in 18 years of doing this, I see, like, we helped, 235 families buy a house last year. I know what the offers that win, the offers that lose. Here are the things you have to do. Here are the things you can't do, right? And bottom line is that, like, if you're looking at a house that's in our area, $500,000 house is almost like an entry level house. So you're looking at a $500,000 house and you looked online, you narrow it down to 3 or 4 that you want to go look at, and you go look at them and there's one that just ticks off more boxes than any other one. Like, you can't find all the bells and whistles or the layout, the floor plan, the backyard or whatever for that in that price range. You need to make a strong offer. If you find 6 that you love equally as well, who cares if you miss out on the offer? But what I can tell you, in an appreciating market that we're in right now, last year it was 20% growth. This year maybe 8 to 10, I don't know. But if you don't win that first offer, that home will now be a comparable by which the next house you want to buy is judged and priced. And so historically speaking, just in my experience, you're going to spend $20,000 to $30,000 more on that next house. And in this rate environment, maybe with a higher rate. Yeah. So would you rather save the $30,000 or would you want to waste it? Right. So This goes strong, right?
Yeah, I love that advice. I love it. Before I ask this last question, I wanted to just touch on one thing. There's a lot of different reasons to take a mortgage loan, right? Different types of products also. With everybody's built up, I think from what I remember, it's 32% increase in a homeowner's equity in the last year, which is crazy, right? Like 32% increase in the amount of equity they own in a home. So when you do your like annual check-ins, right, with the people, your borrowers that you've worked with before, and you're talking to a new first-time home buyer or whatever. Actually, no. Let's just focus on folks who already own the home. What is your advice? It's just as a almost a financial planner, like how to use that equity. Are you someone who advises to keep the equity in the home, or are you someone who advises to get an investment property, pay down high interest debt, all that kind of stuff?
A great question. I would say that, having been in the business before everything crashed and having owned a home that dropped 50% in value, that we know that's not going to happen again because of what we put in place.
Yeah.
There are a lot of concerns around that with people. I don't push that. If someone's going to do something like pay off student loans or pay off credit cards or take money out to go buy a second home, we also look at the second home and show them what it's going to look like from an expense standpoint and make sure they feel comfortable with that whole ball of wax, right?
Yeah.
So have we done that? Yes. 60% of Americans are like on the DISC profile. They're high C's or high S's. And they just want stability. You know what I'm saying?
I just did my DISC assessment. It's cool. I encourage anybody listening to go do a DISC assessment. It takes 10, 15 minutes. You'll learn a lot about yourself.
Yeah. And and yes, I love them. But like with that said, I don't push it. I remember when mortgage planners were saying, pull money out, use a pick a pay, the 1% loans and go invest it. And I'm just not a fan of doing that. Yeah. I'm not even that. I wouldn't even tell someone to go pull money out to invest it at all. But and they come to me and ask me, will I do it? I say, I'm not a financial planner. I play one on TV, but I'm not a financial planner. But like, you can do that. That's available. And maybe we look at some other options of something else they might do, right? Like maybe they pay off their high interest debt before they go and invest, right? Like that makes sense all day long.
Yeah.
Right.
And well, Mortgage Coach offers some really cool tools also, right? So if you're talking about buying another second home or an investment property, you can literally take a look at both those values and see where you'll be in 10 years compared to if you didn't and you just kept it in this home, which is really cool. Mortgage Coach is a great tool. I use it on
every single loan that we do. We use Mortgage Coach for sure.
Yeah.
The cool thing about it too, not to be a big plug for Mortgage Coach, but the cool thing is
they're our sister company. We love them.
Okay, well, let's plug Mortgage Coach. Dave Savage is a great guy and has a great product. So like what I love to do is rather than giving someone a yes or no, like me or someone else, I want them to shop. Everyone wants to shop. So let's facilitate that shopping, but within my ecosystem.
How does that mean? Explain that. I don't understand.
So if someone is going to refinance, let's show them what it looks like to refinance, what their current loan looks like, what it looks like just to refinance and save the money and pocket it and start over with a new 30-year fixed or a 15-year fixed. Then what if they take that money and they take the savings and they plug that back in and they apply that to principal? How much faster can they pay off their loan without even making any extra payments, right? Yeah. So like we helped a guy that it was like 2 weeks ago we closed it. He's saving $70,000 in interest over 15 years by simply reapplying the money he was wasting on interest. He's now applying it to principal, and his freedom point's going to go out by like 7 years, or shortened by 7 years. Yeah,
freedom point. Love the sound of that, right? I've bought several homes, and none of my mortgage advisors have ever advised me or talked about a freedom point in my loan. They just wanted I've learned a lot since then, right?
Sure, right.
I kind of know what to look for at this point, but I didn't when I first started out. Everybody just kind of wanted the sale really quick. You know what I mean?
Right.
And I think the first home I bought probably shouldn't have done that at that time. Probably should have put it off for just a little while longer. But anyways, right. I can tell right talking to enough folks like yourself, Ken, who I really should be working with, right? So anyways, that's a compliment to you, brother.
Thank you.
Well, cool. So look, there's other folks like you who are struggling with getting relationships with realtors. Any advice for them? Any advice for them? You're just starting out maybe as a loan officer, or you've been in the business for a while and you're just not good at it. How would you help them?
I'd say first get really clear on what you want. Write down what your goals are, how you want to work, who you want to work with. I would say identify your ideal client and your ideal business partner, because if someone's going to treat you like a vendor and you don't want that, then you know that you're not going to be a vendor for somebody. You know what I mean? You really want to be an asset to that person. You want to be a partner for that person. And then, just go and look up numbers. Really easy. Go look up realtor numbers. There's tons of ways to do it. You can get a title rep to give you the list that doesn't exist of all numbers. You can go find a buddy that's a realtor and have him give you access to the MLS and pull up numbers. And then have a hit list of maybe 50 realtors or 40 realtors, and you just reach out to them and show your value. And it's just like, you ever see the sales statistics of how many times you have to touch somebody before they commit to a sale? It's ridiculous.
It's a lot.
Usually between 6 and 10 times, right?
Yep.
And so just have a really good follow-up. The money with realtors, and because there's that trust factor, they don't trust you yet. There's a saying that, it's the devil that you know, right? Yep. So they know a loan officer they're working with, and he's not perfect, but at least he's the devil that they know, right?
Yep. It's a known
and so
quantity.
they'd rather take a chance on that guy than take a chance on an unknown factor like you until you've shown them enough, your competency and your character, but you got to drip on them enough. Sometimes, if you talk to 10 realtors, 1 out of 10 is just going to be perfect timing that their loan officer just made a bad mistake and they're willing to take a chance. Yep. So pick up the phone, dedicate half your day. If you're not doing many loans, dedicate half your day to selling, reaching out to realtors, and get face-to-face with them, show them what you got, and uncover what needs. You got to find out what the pain point is and help them. So I think we talked about this. Sales is nothing more than like helping someone get what they want.
Yep, for sure.
Right? Someone has a need and you fulfill it, right?
Yep, for sure.
So go fulfill a bunch of needs. All you need is about what? If you want to do a decent business, you only need like 5 to 10 really good realtors.
Yeah, you're right. You're absolutely right. And you can also give them business, right? And if you actually start making it reciprocal, they're going to be loyal to you, right?
Yep.
So look, customer service is the best marketing, right? It's the best way to grow your business. I am a huge advocate of that. I love the topic of this episode. Thank you so much, Ken. If anybody wants to reach out and connect with you, how would you like them to reach out?
Anytime. I talk with anybody. I love talking, clearly.
Cool.
You can call me. My number's 916-871-7578. They got it down below, I'm sure, or whoever it is, right?
Cool. I love it. Cool, Ken. We'll definitely put it on screen.
Cool.
Well, Ken, thanks so much for a great discussion. This was awesome.
Pleasure talking with you. It was a great time, both conversations we had. I loved it. And great product you've got. That's actually how we met. I was checking out the product.
Yeah, I know. Thanks for listening. If you like the podcast, please give us a 5-star rating, subscribe, and tell all your friends about the show. We at Sales Boomerang started this podcast to elevate the mortgage lending industry by sharing the kind of exclusive, insider knowledge from the successes and failures of the best of the best. The foundation of every successful lender is borrower retention. Sales Boomerang is the #1 fully automated borrower retention system in the industry. 1 in 2 of the biggest lending companies in the United States use Sales Boomerang to make sure they reach out to their borrowers when they need a loan, and more importantly, before their competitors do. If you want to learn more about Sales Boomerang, check us out at salesboomerang.com.